why the name Bacon?
Where did that come from? Actually, I can't take credit for it. It was our creative director who said, "What about bacon?" And when you look up the kind of the meaning behind "Bring Home the Bacon," which is kind of our theme, it literally means doing work and providing value. And so we felt like bacon could do that for lots of people on the blockchain.
Hello today again, everyone. My name is Ben, and as usual, I'll be your host for today's podcast. Today, we have Karl Jacob, a founder of LoanSnap, and a company that's actually disrupting the mortgage industry. So, LoanSnap saw the opportunity with NFTs and how it could bring mortgages to the blockchain in more ways than one. Under the company, they have launched the Bacon Protocol, which is a decentralized mortgage lending platform. They have also developed an ecosystem that will allow anyone with a cryptocurrency wallet to access the highly coveted $17 trillion mortgage industry in the same way banks and government entities often do. Welcome to the podcast, Karl.
Great, thank you. Thank you for having me.
Yeah, so before we begin, right, I just have to ask, why the name Bacon?
Where did that come from? Actually, I can't take credit for it. It was our creative director. We had a lot of names that were more staid and kind of historical or, kind of not as much fun like Homecoin. And our creative director said, "What about bacon?" And when you look up the kind of the meaning behind "Bring Home the Bacon," which is kind of our theme, it literally means doing work and providing value. And so we felt like bacon could do that for lots of people on the blockchain.
Yeah, I mean, it's definitely, you remember this name, it's hard to forget. When I first shared this name to the CoinGecko team, I was like, what? Bacon? Oh, okay, but everyone likes bacon,
I'm glad to hear it.
Okay, so before we dive into Bacon Protocol, could you explain the relationship that LoanSnap has with Bacon Protocol?
Yeah, you bet. So Bacon's going to be a fully decentralized system and have its own DAO. But we started working on this project about 3 years ago. So LoanSnap funded it, and the people who started the Bacon Protocol worked for LoanSnap.
Okay, so it's a separate entity, right? But consisting of the core same team.
That's correct.
Right. Okay, so now that we've kind of established the foundation, what is Bacon Protocol?
So Bacon Protocol is basically a way for anybody who has a DeFi wallet to access the mortgage market, which has been used by banks, governments, and wealthy individuals and large companies to preserve and grow their wealth. So if you think about the way a savings account works today, you take your money and you put it in a bank, and that bank turns around and collects money from all the different people that deposit into a savings account. And then they go out and basically fund mortgages. And the return that you get into that savings account is the bank sharing 0.1% of the 3% that they make on those mortgages. So you don't get very much, but you do get a little bit. And that's how you earn a return on a savings account today.
Tell me, how does Bacon Protocol work, right? Where does the NFTs come from?
You bet. So the way it works is we decided to participate in the blockchain in the best way possible. And we felt like the easiest thing to do there and the most technically kind of achievable would be to wrap an NFT around the smallest thing in the real world we could find and the smallest entity. And that's really the lien on the home. And so when you think about a mortgage, it starts with a lien on a home, which is basically a promise to pay it back, a loan back. But if you don't pay it back, then they can, of course, take the home and repay it themselves. So the lien is kind of the core of the mortgage ecosystem. It's what we call a collateralized loan, which means you are offering up a piece of your home. And if you don't pay the loan back, then they will take that piece of your home or the whole home. That's generally a much safer type of loan than just say a personal loan, which you're just guaranteed the person says, yep, I'll pay it back. And you hope that they do, and they may or may not. And so the NFT wraps around that, and a lien basically exists in the real world at the county level in the United States. And so it's recorded, it's something that's public record, anybody can go and inspect it. What we do is basically somebody comes to us, say, hey, I want to take out a mortgage, and we take a lien out on their house, and then we wrap the NFT around that lien and publish some of the information, non-personally identifiable information, to the blockchain for two reasons. One, so that we can lend against it, but probably more interestingly, so others can lend against it. So one of the things we decided to do is try to participate fully in the DeFi ecosystem. And the way we do that is offer that NFT technology for free to pretty much, well, to anyone. And that way, anybody on the blockchain who sees the NFT and the value of it could potentially lend against it.
Hey, wow, it's so interesting because, this is kind of a real life application of the blockchain. And I'm curious, right? Are there any issues? Because when you mentioned, you're going to wrap a real world physical product, right? That lien. I'm sure there are also other considerations like enforcement considerations and all that, Has that been an issue, or will that be an issue?
Well, it hasn't been an issue yet. The nice thing about mortgage is that the methods and means in order to enforce a lien have been tried in the courts many, many times over. And, I think that really helps with this technology is the fact that we're wrapping something that's a well-worn entity. It's not something brand new, it's at least in the real world. And the only issue is you could imagine a world where the NFT gets out of step with the lien itself. So if you could imagine a world where the NFT, somebody purchased the NFT, say, and a sale happens on the blockchain and it doesn't get reflected in the real world. That's not possible today because you have to pay off the old lien in order to create a new lien. But that would be the area that there might be an issue. And I think keeping those two synchronized is going to be a key contribution that we'll make and other mortgage companies will make and to ensure that. And we're licensed and regulated to do so. And so that's really not something that a mortgage company or anybody involved in that process wants to screw up, because that would be a way to lose your ability to make a living and grow your company.
I was reading about the protocol, right, on the website, and there's one thing that they've mentioned that you've not mentioned, that is actually the bHOME token. Could you tell me a little bit more about what this token is actually?
You bet. So Bacon is the protocol. bHOME is our first token, our first coin, and bHOME is just a token or a coin that's wrapped around a pool of mortgages that are what we call underwritten. So what that really means is we basically build the mortgage and pull the documentation and conform to what Fannie and Freddie, which are the two government agencies that buy mortgages. The government in the United States holds about $3 trillion worth of mortgages on their balance sheet. And so this coin is underwritten to the same specifications that they use for that $3 trillion. Generally, it's considered to be the top tier gold level class A type of mortgage that you would purchase.
Is this bHOME token more like a stablecoin, or is it more like a bond? It sounds like it's kind of both.
Yeah, so that's the interesting thing. Since the DAO is the group that determines what mortgages go into the pool, it's kind of outside of our control. Our recommendation, bHOME, is that it is underwritten to the Fannie Mae and the Freddie guidelines. That could change over time as the DAO decides to do different things. They could decide to create a new coin. So you could have a B jumbo coin that would be focused on loans that Fannie and Freddie don't do, but are larger in size. Fannie and Freddie actually limits the size, the total loan size that can be given in order to make it a little bit more of a quote safer investment. So I think that one of the interesting things that we are looking at is kind of how it's classified. As far as we're concerned, we don't believe it's a security, and most people agree with us because mortgages are regulated by the states. So they're not regulated by the federal government, they're regulated at a state level. And the other is that We don't do any pooling or grading or anything like that, which is generally the thing that people use to call it a security, or things as security like an MBS. And those are generally called a security because somebody does work to create the asset class, whereas we don't. We let other people do that.
Okay, so you mentioned that people will be getting, it's kind of like a savings bank account, right? In this way, but then more goes to the user. Could you explain a little bit more about how investors in this protocol will get their returns?
You bet. So it's kind of a unique, well, it is very unique. We invented this idea called a stable plus coin. Most of the stable coins that are out there, you purchase a stable coin and it stays pegged to the dollar in many cases. And then you get rewards that are a separate entity to the coin itself. And as we all know, as cryptocurrency holders, that means gas fees and claiming the rewards and a whole bunch of stuff that we decided was really not necessary. And so what we decided was that the profits, or in this case, the return from people paying their mortgages, should flow back into the price of the coin. So unlike most stable coins that stay pegged at $1, bHOME started at $1, but now it's about $1.02. And that's just the result of the mortgages now in the pool and the payments that are flowing back into the coin, and basically the overall pool of cash and homes, basically liens, growing over time. And so you can expect that to continue to grow. And so rather than having a situation where you have to go claim your rewards and pay gas fees and all that, you just see your coin grow in value, much like you would see the money in your savings account just grow. You don't have to go claim your savings account rewards at a bank. And we didn't feel like that was the right approach in the crypto space.
So I guess it's quite similar to how wrapped RV tokens might work. Right,
correct.
And do you just have a rough estimate on what kind of returns can investors see right now?
Always a tough thing to predict, particularly these days. One of the interesting things about Bacon and the bHOME token is that the interest rate that is given to homeowners that become part of the pool is governed by an AMM, a market automatic market maker. And that allows for some interesting behavior in the system, mostly rates that are quite competitive, if not very competitive, against other rates that are available out there. So the return is generally about 2 to 3% today. So it's not what you would consider some of the more aggressive returns that you might get, but it's backed by liens on homes. And so I think one of the more interesting things going on today, of course, is there's been a big drop in the crypto markets. And one of our hopes for something like bHOME is that people use it as a way to put 10%, 20% of the money that they make into something that is backed by something that's off the chain and is a little bit more stable than even Bitcoin or Ethereum, as we've seen over the last probably 2 or 3 days.
Yeah, that brings me to my next question, because Bacon Protocol, like you said, is backed by a certain type of houses, right? And I think you mentioned earlier, it's houses that are accepted as collateral under the Fannie Mae and Freddie Mac conforming loan guidelines.
Correct.
So do you plan to accept any more type of houses in the future? And what about other types of collateral like crypto assets?
Yeah, you bet. I mean, the short answer that's up to the DAO. But the longer answer is that, of course, we could use this for pretty much anything. And we think that there's a lot of opportunity, particularly within housing. As we mentioned, there's 17 trillion of mortgages out there, which is quite a large market. So we could be quite successful just doing it there. But the idea applies to really any kind of lending arrangement, and in particular, any type of collateralized lending arrangement. We may do uncollateralized loans as well, but we're going to let the DAO kind of guide that and really understand what the risk appetite of the investors are. When you think about this, it's a great opportunity for people around the world, which is the first time people around the world have had access to the mortgage market in the United States in this kind of format and with this amount of ease. And we think that's going to be the same thing with potentially car loans, personal loans, and a whole bunch of other products that we hope the DAO will approve and create coins for.
I'm curious, how is Bacon Protocol going to decentralize themselves, or are they already decentralized enough to be considered DAO right now?
So we're started decentralized. So unlike a lot of people who do pre-token sales and raise money from their existing investors, which we have plenty of, like Richard Branson and Tom Best and others, including the Chainsmokers, we decided just to launch it and allow anyone to invest, including our existing investors. That was a tough call. That was a tough decision to make, but we wanted to be decentralized from the beginning and not kind of go from centralized to decentralized as many projects have. So that was the first beginning of the decentralized piece. The next is that houses that actually are loans that we do are presented to the community around the Bacon Protocol, actually on Discord, and voted on as to whether or not that particular loan should be allowed in the pool. The Oracle currently is kind of spec'd to the Fannie and Freddie guidelines, but as well, the Discord can kind of make a decision as to, well, there's 5 loans that fit those criteria. Which one would we take? I think in the long run, we would like to see that baked into the DAO itself, and not obviously have a Discord channel to do it, which is a lot to manage. And I think it's critical because you can imagine a world where a group of people could get together, say in Detroit, and create the bDetroit coin and decide, hey, we're just going to fund houses in Detroit that don't necessarily meet a lot of the qualifications that are out there, but would help the general neighborhood and hopefully promote a safer and less rent-owned environment, which people have seen is a big data point and a big reason that neighborhoods grow and I think improve over time is when home ownership increases, so does the way people value the neighborhood. And that would be a great way for the protocol to help in those neighborhoods that have had a lot of trouble, particularly during the last, say, 5 to 6 years.
Yeah, I think there's a lot of niche applications that can occur. Like you mentioned, for example, picking a neighborhood in Detroit. I think it's quite interesting because I just thought of something, and in Malaysia, there's actually been quite a lot of heavy flooding recently in some of the states, and there has been a lot of houses lost. I was thinking also, wow, this is cool, right? This application could potentially help these places rejuvenate or recover the housing industry through some blockchain application. And you do not need intervention of banks or governments to do so.
Yeah, I think that's super powerful, particularly because the money could come from outside the United States as well as inside the United States. And it's kind of like the old days when you would do a barn raising. I grew up in the Midwest on a ranch, and you didn't really build your own barn. You called up your friends and they came over and helped you build it. And I think we're going to do that in a lot of these areas. Sure, it's great to have people donate money through charities and all that stuff, but even better that you would provide a functional mortgage product that would help rebuild the neighborhood. And potentially those donations could go directly into the coin and not really have to flow through all these organizations. And as you know, there's a lot of times waste that happens in those processes. And so if they could go direct to the homeowners, say your house was destroyed and maybe you get half the insurance money to replace the house and all that, and then the coin could provide you a mortgage for the rest of it, that would be a huge win, particularly for places where there aren't other options, banks or the government. A lot of times they don't meet the guidelines, or they're kind of below the radar, so to speak. I'd love to see as many of those people helped as possible, both people in the neighborhood itself and friends of the neighborhood, maybe people who used to live there or who have relatives there, and then just kind people around the world, who see a disaster in a place like Tonga and want to help and figure out a way to do that. Banks are just too slow, and governments are too slow to get the money to the right place at the right time, whereas we all know the blockchain was built for that kind of thing.
I want to ask, because Bacon Protocol is quite a niche product, but it's not the only type of mortgage/blockchain product, because as far as I'm aware, there's one other protocol that does this. It does something like this, which is Centrifuge. And if I'm not mistaken, they have done some collaborations with MakerDAO to onboard loans through DAI as well. Could you share what are the key differences, from Bacon Protocol to other protocols like Centrifuge?
Yeah, you bet. So we actually had some good conversations with the MakerDAO team, and we love the fact that there are other projects that are working on things like this. The Centrifuge project is mostly focused on loans that other people will not give. So what the industry would call hard money loans, generally riskier loans that are outside of credit bands or loan to value bands. Definitely things that need and should be done and have somebody there. We're just not in that game, right? Our game is focused on the same loans that kind of are the underpinnings of the banking and business and governments, versus the more edge case loans that are a little bit riskier and give you a little bit better return if everything goes well, right? And that's the problem, is hard money is generally directed toward loans that may not pan out for many different reasons. The other is we're solely focused on mortgage and solely focused on bringing mortgage to the blockchain through the NFTs directly, which means other people could lend against those NFTs. And Centrifuge and other projects are generally more of a business relationship with the loans. And so they're basically tranching off the loans, and they're taking kind of a level of the loans and selling that to Aave and Maker and others. And then a second lien maybe to a different group of people. That's not something we do. We think that's a opportunity for someone else, but our goal is to build the core infrastructure and get mortgage right, and then go from there, where Centrifuge and other projects are generically trying to tokenize real world assets everywhere, which is a great goal, but we think quite difficult. And we'd like to focus and get it right in mortgage first and then expand.
Are there any interesting statistics or stats you could share about Bacon itself? For example, like how many mortgages do you have?
Yeah, so I think the most fascinating one that really shocked us is it's 180 wallets from all different countries. And that really blew us away. We thought this would be a US product that people in the US would get excited about. Maybe that's our ego because we're in the US, but the value has been seen around the world, which is really fascinating. That's probably one of the most interesting stats. I'd say the other is the people who invest in bHOME and who adopt bHOME tend not to be what I would call hardcore crypto people. They are generally relatively new to the blockchain, but they find mortgage something and houses and liens on houses something they understand and they've learned about before. And this is familiar to them, which I think is a big benefit. Probably the last would just be that, it's grown quite quickly. We launched it last year, not much fanfare, and we're not running any advertising or anything like that. And still it's grown to about 5.2 million in the amount of money that we've used to fund houses, and about $30 million worth of home value. I'm really proud of that. And it's been, definitely not the rocket ship that you see in some of the other protocols, but our goal is to be the tortoise in the tortoise and the hare race. And we want to be the one that gets to the finish line no matter what. And we didn't predict or want some of the things that are going on in the crypto market today. I think this is a great example of why we took the approach that we did, which is the slow and safe approach versus, the more aggressive approach that could have yielded early benefit, but long-term may not have worked out.
Yeah, I completely get it. I mean, MakerDAO also has experienced a lot of liquidations over the last few days. So
yeah,
it makes complete sense when we talk about, during downturn or bear markets. You mentioned a lot of NFTs, right? And NFTs now are the main focal point behind Bacon Protocol, because that's how you wrap the liens. But beyond NFTs, are there any other blockchain applications that the mortgage industry can take advantage of?
Absolutely. We think there's just so much to be done here. I mean, obviously the obvious one is I want to pay my mortgage in crypto, and that's not possible today. If you think about servicing or the process of sending out a bill to a customer today in the email or website or, God forbid, snail mail, right? It's archaic, it's slow. And I think probably more importantly, it misses the fact that there's a lot of flexibility that you could create using blockchain technology. So one of the things obviously the NFT is quite powerful. One of the cool things about it is that you can actually refinance the house automatically down. So you can imagine a world where let's say I financed a house at 3% and we created the NFT and we did the lien and everything like that. And somebody comes along and says, gosh, I see that the credit score of that person is increased or the home value is increased. I'm willing to lend money against that lien at 2.5%. Well, today that's a huge refinance process and lots of documentation in 30 to 60 days. In the blockchain world, that could happen in milliseconds. And that to me is a great benefit. And then probably the last is what I would call the death of foreclosure. We don't think the concept of foreclosure makes a lot of sense in a blockchain world. And to give an example of that, you could imagine a mortgage where if you didn't make your mortgage payment, the lien would just grow. So say it's a $50,000 lien on your $300,000 house. Maybe you don't make a payment for 6 months. Maybe that lien turns into a $70,000 lien on your house. That I think is a much more humane approach than taking somebody's house, selling it, repaying the loan, and getting the benefit of the upside of that house while the homeowner is basically, homeless after that. And so we just think that's one of the neat things about the blockchain will bring to mortgage is a rethink of all these things that are really detrimental to the consumer experience in mortgage and could be drastically improved. And there's a whole laundry list of those.
I mean, you mentioned foreclosure, and I used to work in a law firm, and even in the legal firm, when you're working for the banks and everything, there's a lot of paperwork that needs to be done. So like you mentioned, I know it can remove all of that.
Yeah, that would be a great day when that's gone.
Yeah. Okay. Last question of the day. What are the long-term goals for Bacon Protocol? Let's say the next 5 years.
Yeah, that's a great question. We're thinking about the next year, but I think the long term for the Bacon Protocol is to make the consumer experience as efficient and painless as possible, and doing that by bringing a new type of investor to the mortgage space. And that investor is me and you and anybody who has a DeFi wallet and wants to have a investment that is similar to what banks and governments use, but think differently than these large institutions, particularly when it comes to flexibility and understanding of the human condition. And so, long term, we hope this has a profound impact on not only the industry as it exists today, but also in the future, the types of loans and people who can get loans. Because I think there's a real opportunity for lending to people who today can't get a mortgage, but in fact have decent credit and have the ability to repay and have a job. And all those characteristics that we know make them someone who is likely to repay that loan. And yet, because of where they live, because of the type of job that they have, gig workers would be a good example of people who have a hard time getting a mortgage, even though their income is quite consistent. So I think that's the long-term goal is to fix as much of that as possible and bring a whole new distributed balance sheet to the mortgage purchasing process, meaning the people who buy those mortgages, which will drive change to the consumer and make it a much more efficient, safer, and I think friendlier mortgage than we have today.
Okay, before we end the call, is there anything else you'd like to add or share with our listeners?
This has been great. We have been hard at work on the governance token, which we're launching next week. So we're excited for that, and hope everybody pays attention and comes by our Discord or website or Telegram and says hi and contributes to the project.
All right. Thank you so much, Karl, for joining us.
Great. Thank you very much.
Thank you.
This podcast is provided as part of the overall information on cryptocurrency contained on our website, is for your general information only, and does not howsoever constitute any endorsement, financial or investment advice, nor any solicitation or offer of securities or other financial instruments. CoinGecko and the podcast presenter makes no warranties, implied or express, of any kind in relation to this podcast, including, without limitation, the accuracy and updatedness of its content. All opinions and recommendations there in the podcast are based on the personal opinion of the presenter. Please conduct your own research and procure professional advice should you, at your own risk, decide to howsoever invest or trade in relation to the content contained in the podcast.
For the latest crypto prices, visit our website. If you haven't already, make sure to subscribe to our YouTube channel to keep up to date on the latest crypto trends.